there is a physical part that you can suppress for a certain period of time. You can even suppress it like very long with various techniques and so on. However, ultimately, the commodity itself dictates the direction of where prices are going. And what is happening right now in the silver market is a structural problem.
Monaco 64, home of alternative economics and contrarian views. So today is Tuesday, December 9th, 2025, and I've got Dario on. We've had him on before, and he's a macro analyst from Hong Kong. He's based in Hong Kong. And Dario, welcome back to the channel. And I'll let you introduce yourself and give the viewers some information about where they can find your work.
Hello, Mario. I'm really happy to be here. Actually, it's an incredible moment because silver just is trading at silver futures are now trading at $59.25. It's
Yeah, it's funny
quite a
because
time.
I was 10 minutes ago, I was getting ready for an interview and silver was at 58.30, the spot price, and now
Yeah,
it's 58.70, and even gold is gone back above 4,200.
yes,
So
it's quite
that's
incredible.
encouraging.
Yes, like I am I'm a macro analyst. I have like a very strong fixed income background, so this is why my approach is a bit different from social media. I'm on X at just Dario. I'm on YouTube, my little growing channel, the Real Just Dario, where I share my thoughts and the podcast version of my article. And of course, all my research is on justdario.com, including plenty of macro research on gold and silver that I kept writing for such a long time when the attention was not so high. But it's a bit my curse. I always think medium to long term. I'm not really like a day trader or whatever that is so popular nowadays.
Yeah, and it's interesting because my background as well, originally it was fixed income when I started working in Geneva and the city of London. And then I started falling gold when I bought some Krugerrands in 2002 for 220 pounds, the ounce. So and you know, Darian, in '08, I thought the whole system was going to implode and gold was going to be doing what it's doing now. So you have, and let alone silver. So you have to be patient in this space. And I think it's starting to pay off. So maybe you could talk a little bit about what you've been seeing in silver, and then later on we can look at bonds, government bonds, because they seem to be in trouble, and maybe like back in 2011 when silver made an all-time high, we had the European sovereign debt crisis. In 1980, we had the dollar crisis. Rates had to go to 20% to save the dollar. So maybe silver is telling us something. So yeah, I'll let you give us your opinion and what's going on COMEX, what you're seeing.
Thank you. So, I mean, what's happening right now is incredibly fascinating. I am talking about silver and gold for ages. I wrote like articles, like one of the first explicit article about silver was back in June, where actually I warned about a silver squeeze that was brewing. And as usual, I mean, I don't look at charts that much or whatever. I always look at the structure of a market. And the structure of this market, actually covered in the previous interview, for both gold and silver, is incredibly skewed towards the paper market. And what the paper market does, the paper market incredibly manipulates prices, and it can do that for a very long time. However, with regards to commodities, but in this case, very special type of commodities, precious metal, gold and silver, there is a physical part that you can suppress for a certain period of time. You can even suppress it like very long with various techniques and so on. However, ultimately, the commodity itself dictates the direction of where prices are going. And what is happening right now in the silver market is a structural problem. From a monetary perspective, silver is not a reserve asset yet. And I loved your previous interview with Eric when he said this because there is a problem. The silver price currently is too low. So from a monetary perspective, a logistic perspective, and so on, doesn't fit a central bank reserves type of allocation. Even if the UAE, for example, already mentioned, and they already been doing that, they will be start accumulating physical silver. And they did this months ago. Many people ignored this incredible shift. So we are coming at a juncture that accelerated with COVID. In the past 5 years, and for sure for the next year, the silver physical production plus the investor demand for physical silver is expected to be at roughly 1 million ounces, sorry, 1 billion ounces per year. Sorry, 1.3 billion ounces per year. So this is the demand from industrial perspective, while the production is stuck around 1 million ounces. So over the past 5 years, there has been a chronic deficit in the silver market, in the market for physical silver. There's not been a deficit in paper, paper market, there's plenty out there. Like the ratios, like depending on the estimates, like 100 to 1, 150 to 1, even worse.
Especially the LBMA and COMEX.
Yeah, it's completely ridiculous, frankly speaking. But the physical market has a structural problem. And this deficit has been literally draining the gold reserves in both COMEX and LBMA. And not only these are the two major markets, but as of late, the reserves of China are being actually incredibly low. So I wrote an article like right before like the recent breakout when everyone was already like they were dead set to call the top of silver. Oh, it's a speculation, whatever, this is gonna crash. I'm like, you guys don't understand. Like, this is not the Hunt brothers trying to corner the market. This is not retail people, trying to squeeze the market and getting together and whatnot. The driver of what's happening is industrial demand. And there is one very basic dynamic of industrial demand that sometimes it's greatly ignored, is that if you don't have the commodity, you have to stop production. And if you stop production, then you stop selling. And if you stop selling, you don't have revenues anymore. So it's critical to make sure if you manage the inventory and you calculate whatever you're going to need for the production in the future in order to not to stop operation, to have enough physical silver in your warehouses. And right now, mathematically speaking, the deficit expected for next year, that is, let's say on average, depending on the estimate, 250 million ounces of silver, is roughly the same amount of free float sitting within COMEX and LBMA. The amount of free float in China is quite low. Okay. So this tells you one thing. This tells you that someone, you know, because of course the production is not linear. It's not that if you need like 10 million ounces today to make electronics, to make solar panel, to make like electricity conductor, to make silverware, to make like whatever. You're gonna get heavy like this. You need to lock it in advance. And if you have to lock it in advance, this is a part of my analysis that usually people struggle with. So I'll try to be as simple as possible. We enter in the field of basically behavioral finance and game theory. Okay. So you have to beat the competition for that limited supply of goods and commodity of whatever you need. And what you start doing in that situation, if especially you foresee that this deficit is gonna be persistent, not just for 2026, but beyond, similar to what happened to COVID. Why the supply chain completely exploded into COVID? Because companies started to order 1.5, 2 times, 3 times of whatever they needed because they didn't know if they will get that. So that created an incredible overdemand, prices skyrocketed, and an incredible tightness in supply. That was the excuse of the Federal Reserve to blame inflation. Okay, that honestly is completely asinine. Okay, why? Because yes, you have the impact now, but in the moment you get all the deliveries, because they will arrive to you, it depends which moment in time, then there is going to be a oversupply. And when you have an oversupply and a limited amount of warehousing space, then you need to cut prices to make space into your warehouse for the additional inventory that is coming, hence price go down. So that supply shock, okay, was temporary and it would have offset itself through time. So, long story short, what I expect on silver, and then, the event of the past 2 weeks have been like beyond incredible. Like the during Thanksgiving night, it was holiday in the US. I was awake here in Asia, so honestly, it was a quiet day. I wasn't expecting anything happen. And then I look at the silver futures, and I'm like, there's something weird going on here. It's like, and then it started rising and rising and rising, and then literally in the moment they were about to break out from the previous level, the CME servers go down, and what is what this should have really raised the alarm bells around, and it did. Why? Because first of all, after a lot of research in that specific facility. I mean, that facility is a tier one type of military grade facility that allows the processing of computational operations geared for the type of like fraction of millisecond of high frequency trading and whatnot, with multiple redundancy measures. Plus, because it's based in Illinois and it's very cold, if anything fails, that type of facility is even enabled to allow external air circulation to come in and cool down the servers. Imagine everything of this goes wrong. Still, because of regulation, all market operator and financial intermediaries are obliged to have redundancy facility where they can quickly resume operations in matter of hours. I mean, myself, when I was working at Citigroup, I went to test those facilities. Basically, you go
Yeah,
there,
I
you
remember
walk
that.
around.
I used to do that on the weekend. We used to go,
Yeah,
it was a whole office. It wasn't like
yeah,
it was just there. I forgot what they used to call that, but I worked for City as well, and we
yeah.
used to do that at ABN AMRO, all of them. So before we proceed further with the interview, I just want to give a shout out to Dirty Man Safe. So with traditional safes, their so-called advantage is that criminals can't break into them. But Dirty Man Safe is different. Its advantage is that it's undetectable, so they can't even try to break into it. And that's only one of the many features of Dirty Man Safe. They provide three different sizes, and you can bury your gold coins, silver coins, bars, important documents, jewelry, and anything that's valuable for you. So yeah, Dirty Man Safe is affordable, convenient, provides you peace of mind, confidentiality, and sustainability. So if you want to find out more, there's a link below in the description. It will take you to a landing page. And if you use that link, you get 10% off if you were to decide to buy a Dirty Man Safe. And they ship it to Europe as well, not just the United States.
Yeah, so all the critical functions in markets need to be able to operate in case of disaster. Okay, so and of course the CME has redundancy facilities that are miles away. There is one in New York, if I'm not wrong. So why they didn't turn it on? Anyhow, the market shut for 10 hours during a low trading Thanksgiving night. And so, I mean, coincidentally, they resumed operation. And so many people gave me crap for this, but people like to praise themselves to be like expert of market plumbing or whatever. But honestly, I don't know how much time they really spent like on the field to understand. But the operations resume exactly at the moment when the morning operation at the Federal Reserve of New York for the allocation of amounts borrowed at the Fed standing repo facility resumed. And that specific day, okay, it was also a settlement day, but that specific day, the banks borrowed, I think, like 24 billion right away. And all the people that dismiss this, I mean, this is not coincidence. And then, 1 week later, it comes out that, you know, uh, basically like JP Morgan was hit with a significant request for physical delivery. They moved some COMEX inventory from registered to eligible in order to get it away from that. Um, Actually, the 24-hour later that happened, it came out that 7,330 futures contract, equivalent for 36 million ounces at Thanksgiving, were put at delivery. So, I mean, clearly the market broke. Like these dealers allegedly, JP Morgan, Citigroup, and I think Deutsche Bank was involved as well, although Deutsche Bank was on the long side. I mean, these brokers gathered around, and apparently there was negotiation with the holder of those contracts in order to accept rolling those contracts into March and a compensation of $65 million in order to get away. How were those people the holders of all the contract? Are those people really Paul Tudor Jones as the voice keeps spreading around? Who the hell knows?
Yeah, I've
Okay.
heard Dario from sources, pretty good source, that that day it was like central banks from the Middle East, and they don't want cash settlement because they're trying. Well, let's say if it is, they want to get rid of dollars. They want the physical. So, and the Paul Tudor Jones thing as well, is that just like something put out there to
I mean, I
because
don't know what.
you're seeing as well that even in the December future right now, which is really shouldn't be traded or anything because
Shouldn't
it's
be
not,
active.
yeah,
Yeah.
it shouldn't be active. You've seen people stand for delivery, and you tweeted recently that uh, what's going to happen on the 30th of December when people come for 1,000 futures delivery, which is what
Well, actually, it's very interesting. So currently on the December 25th, there are more than 10,000 contracts pending delivery. That's 50 million ounces.
which is quite a lot. I mean, it's
And
more than what happened during Thanksgiving, isn't it? It was
oh
37.
yeah, way more. It's not the recent record yet. The recent record was in July 2020 for a little bit over than 11,000 contracts. And yeah, this is the page. So, and this contract right now should be like that dead in the water, right? But in reality, it's still active. So anyhow, what I tweeted today is like it was very funny because I mean people start to talk, okay, and I am like one of those people that I'm still like in conversation. I like to have like friends. Many of my friends are still working for banks and whatever. Some people are independent trader and commodity. Anyhow, people chat, and then like I mean this is not a new thing. It has been like going around. But today, interesting, I tweeted, like, I got voice that there is an Asia-based um, buyer that is not accepting cash settlement. They want the physical, and they had to get the physical by the 30th of December. That's the settlement date. And 30 minutes after, because I mean, for me, I'm just like, I'm not a trader of this stuff or whatever. Just put it out there. But the funny thing is that 30 minutes after, surely like these things was spreading like wildfire in Asia. You start seeing like future contracts for March 2026 silver that spikes and hit at 59. And hilariously, as it happened yesterday, exactly at 59, you see a big sell coming, slamming the market all the way down below 58. And now we're talking a few hours later, and the futures are at 59.27. I mean, this is not supposed to happen. And this is not supposed to happen in December. I mean, December, anyone that worked in an investment firm or whatever knows that is the month that everyone just wants to close his book, just want to like, firm their bonuses. They don't want to have any mess or whatever. Like this kind of volatility heading into December when everything is settled. So you should be like, just preparing for the following year is incredibly unusual. And the last thing about silver is everything is converging at the same time. And this is the real problem right now because currently also talking around and whatever there is not really much retail interest on silver. On gold, yes, but not really on silver. There was a little bit of a wave, but people have been still have these you know behavioral bias against silver of being an incredibly speculative asset, that is called like the devil commodity, right? Because it basically screws you over. But what they don't, so this element is not there yet. So you have the industrial element that is driving this, plus, as you said, UAE already said explicitly they would already allocate to silver. Then there are developments in India, in China, in US. Already there has been labeling, both in China and the US. And another thing that completely have been gone like under the radar. It's like whew, people didn't see it. Silver has been already circled as a strategic commodity. I mean, honestly, people without silver, all this like frenzy about semiconductor, whatever, electronic, you need a lot of silver for that. And
There's no
electron
substitute either, is there?
there is no immediate substitute. I was actually having a conversation during this weekend, and actually this was the argument. It's like, oh, but silver can be replaced by other electricity conductor. I mean, yes and no, because other conductor might have a higher rate of degradation, but also on the other side, you simply cannot change your whole manufacturing process, sourcing process, inventory, quality checking, and whatever in the blink of an eye. You cannot start using aluminum instead of silver. The quantities are not even there from a chemical perspective, right? Everything changes. So, like, I believe we are really at the cusp of something potentially incredible to happen. I mean, I'm not here saying, like, oh, this thing is gonna go to $1,000. I mean, it's not possible. Okay. I mean, the market will shut way before. I mean, they shut at Thanksgiving for like a freaking delivery of a request of delivery for 7,000 futures. So, I mean, the system always gathers around in order to protect itself for self-preservation purposes. But, but might seriously be at the cusp of all these industrial buyers essentially starting to worry about the continuity of their operations. And then they will bring forward all the demand for physical in order to make sure that there are no disruptions on the front. Also, to make sure that they're still getting at a price that is economically viable. So, silver doubling or tripling in price is not gonna, you know, it's gonna have an impact on their margins, but might still be manageable, especially in an environment where people like keep paying prices no matter what because of this all money printed. But if all this demand gets front loaded and the herd behavior, once starts doing that, then the second, the third, and then prices start effectively like losing control. And then you, at that moment, you get all the like, social media and the mainstream media attention. You start getting like all the, day traders, tourist traders, retail, FOMO traders, hedge funds, and whatever, all coming at the same time. I mean, this thing, I think no one at the moment realize that the probability of a tail event in silver is much greater than their statistical models are pricing, like far from it.
Yeah, I think one of the reasons for that, Dario, is that most people don't understand the structure of this market and the fact that the LBMA and COMEX have been supplying uh, massive amounts of paper over the years, and now it's coming to the rubber's meeting the road, so to speak. And, at the end of the day, people need the physical silver. Up until recently, COMEX and LBMA could get away with it because people would take cash settlement, or they just wanted to speculate. And I think the other thing is that the big boys out there, the big funds, speculators, they're like sharks. This is going to be like blood in the water for them, and they're gonna participate as well. And so I agree with you that silver could very easily go to 100 even before the end of the year, I would say. I saw you tweeted that it could go to 100 in 2026, but I would actually say it could go to 100 very soon, and it will be yeah. I mean, I think Comex and LBMA will stop trading at that point. We might not even know where the price is.
The very interesting thing. I'm not sure about your audience, but I like to make this example because I'm not sure if you followed like the events 5 years ago of GME. You know, and what happened to silver right now really reminds me of that. Of course, it's not exactly the same and cannot be of the same type of like magnitude from a percentage perspective. But I remember that basically the shorts shorted so much stock way beyond so there was a lot of naked shorting there, that I remember that in order to close those positions, some shorts even started to buy ETFs and asking for the underlying securities in order to close the short positions. Huh? I would even like here we know that there is a lot of like physical silver hypothecation. There is no really rock solid, trustworthy audit that all the ETFs out there and whatever, like in theory, physical baked contracts are, there is really the physical silver there. I mean, like the facilities that you need to hold that amount of silver must be huge. Okay. I'm just talking from from a structural perspective. And then when you check like the expense ratio of those securities is too low. So, I mean, everyone knows that the commodity is being lent in order to contain those costs, to make extra profits and whatnot. So, I mean, we might end up in a situation that this brokers and whatever might be forced to buy shares of these ADFs and then like destroy them, and people that need the physical silver might even like the extreme scenario might even start to buy like PCLV or SLV or whatever, and the demand silver, like silver deliveries out of there. That is honestly, it's a very like extreme scenario, but it's possible under certain circumstances. So as you mentioned, at some point we might have complete price dislocations, and simply people don't know where the market is, and that is frankly the worst can happen to a market, because imagine like you're driving on a highway and all of a sudden like your your windshield gets completely dark. So what do? You cannot slow down because there are people behind you. You cannot accelerate because there are people ahead of you. You don't know whether you need to go straight, whether you need to go turn left, or you need to turn right. It becomes like, you know, almost a quantistic experiment to a certain extent. Okay. So you eventually know that you are going to crash, but in that state, you are effectively like the Schrodinger cat. You are in a normal driving state and in a crash state at the same time. Like you will only know once the event occurs and if people like open the box. So this is all these things we're talking about. It's so beyond the common knowledge and sensibility grasp still, and I'm quite surprised about that. But frankly, like many things that I've been warning about before, that people were like, "Come on, man, you're crazy. It's not possible." I mean, I remember, I'm not sure if you saw that tweet, that famous tweet from 2023 when I went to China, and gold was at 1,800, and I really took a video, and I'm like, guys, like here they're buying a ton of gold, physical. They don't want it. Like Chinese people are, they don't want the paper. Okay, they really want the physical, right? And here is the other shift. So at that time the price was at 1,800. Now it's 4,200. So it's less affordable, but the inflation pressures are still there. And people, especially in China and in India are shifting towards physical silver. It's simply like more affordable. It's like cheap. Okay. So like these dynamics that are so far away because people today they love to see like these stocks going to the moon or things moving around, whatever. The attention span is so low. But macro investor, fixed income investor like that are here for the long run, or even some stock investors like Warren Buffett that they think about in terms of cycles. They don't think about like today or tomorrow. Okay, know that certain type of developments take a while in order to show. And once they show, you hit that escape velocity when everything starts going parabolic because of various form of herd behavior. So as you say, I mean, I tell you, silver at 100 before December, that will be a bit of a shock, but I cannot guarantee anyone the mathematical certainty that by March this is at 100. But honestly, if you look at the numbers right now, I mean, at the end, it's demand and supply.
Yeah,
And supply is not there, and the demand is really there.
yeah.
So,
Yeah, I see that the bond markets as well. It's not just
yeah,
Japan
no
now
problem.
that's looking bad. I just had a look at the JGB futures chart. That it looks like it's sinking really quickly. But also, I don't know if you've looked the 10-year and 30-year German government bonds, they're sinking as well. And now treasuries yesterday, they sunk a little bit. So I think that could be something to talk about on our next interview, if you don't mind. And I wish
No,
you,
yeah, I'm
yeah,
even happy to mention like quickly now
yeah,
what's happening in the bond market. I think we touched upon the previous time as well. So it's it's very simple. Simply, all these governments are running deficits. So all those people that, despite all that's happening, keep looking at central banks in isolation. Oh, the Fed balance sheet has been shrinking, or this or that or whatever. If you look at the total amount of money supply in the system, we are in a global financial system where the Fed is the lead to a certain extent, but we're in a global financial system. So whatever is printed into Japan, UK, it flows in other part of the economies in the world and vice versa. So right now you have all these governments that are in deficit, and the deficit is worsening, is not getting any better. And all people, you have three levers here. You have the federal fund rate, so you have the short-term part of the curve. You have the long-term part of the curve. They're not the same thing at all. Okay, they are completely different. And then you have the inflation component. So, sorry. And you also have the currency, of course, as a matter of fact. So, what's happening here is you have all the central banks that are trying to push down the front end of the curve. And in pushing down the front end of the curve, imagine like a bucket of water. If I press this down, the pressure is going to raise this amount of water. But then, what many governments have been doing in direct or indirect way, they have been issuing a lot of short-term bills because they know the central banks are going to keep the lead on it in order to buy back the longer part of the curve. Especially Japan and US have been doing this. And this pushes this down. So you have this going down and this pushes down, but you can compress water up to a certain extent. What happens if you keep pushing down, the water starts to spill. And when it starts to spill, that is called inflation because it starts circulating in the economy. But then there is another problem is that this water that spills around, and then it comes back into the bucket. And once it comes back into the bucket, here you have the push down, and then it starts lifting the pressure on rates. Okay, because it's essentially
Yeah,
how it works.
we
And
saw.
then because of deficit, they keep injecting more water into the bucket at the same time. So you have this, they are trying to hold together this whole system, but it's clearly spilling around. JGB yields going bananas is one example. Treasury rates rising into a Fed expect to cut rates. It's something that any fixed income person out there is getting goosebumps. And the funny thing is, I've been writing this like for over 2 years, multiple articles when people say, oh, the Fed is going to cut rates. I remember banks were putting like 10-year treasuries target at 3% at some point. And I was like, you guys don't understand. This will keep going up because you have so much money printing and so much inflation that you guys are not measuring, by the way. You're not measuring, but investors are not stupid. They see that there is less money in their pocket. So people will demand higher and higher return in order to hold your debt. Because let's not forget that government bonds are simply fiat money in the future. That's what they are, right? So I'm like, I know you're gonna keep printing that much money. You're gonna pay me this because you're deluding me today for money that I'm gonna receive eventually in the future,
Yeah,
right? And this whole thing, so they keep pushing the bucket down. This spills creates inflation. Monetary inflation is a problem. Where does it go? It goes in consumer prices, it goes in stocks and whatever. People keep seeing stocks going up. Why nobody is so rich? I mean, you keep seeing reports from the real economy of how bad is like the affordability, the housing affordability, how like stretched are people in consumer credits. 25% of the buy now pay later loans in US right now are used to purchase food. Like that's not credit card because one commented on me, but that's what credit cards are used for. No, man. When you use a credit card, the issuing bank of the credit card is effectively paying the merchant. Okay, so the merchant is eventually gonna get its money. However, for buy now, pay later, because the bank doesn't want to lend you money, the merchant, in order to make that sale to you, is giving you credit. So now there is a credit component within the economy created by this incredible level of inflation that the public government still refuse to acknowledge, to measure and whatever. But people see it everywhere. It's like, wow, like there is this thing that went out, like I think the other day on X, like, oh, people like making $300,000 in US, according to Goldman Sachs, like 40% of the people live paycheck to paycheck. I mean,
yeah. Here in the
I
UK
don't
as
get.
well, you have families that both the father and the mother work, and they have to go to food banks. So it's crazy. And I guess we're seeing now the other commodities aside from gold and silver starting to creep up. I saw the Bloomberg Commodity Index. It broke like a 3.5 year base. So yeah, this is a really good analogy you used there about the bucket of water for the bond market, and that should be really yeah, it's really clear what's going on now. And Dario, I'm gonna have to wrap it up here. I could talk to you for hours, but I
Oh,
do
me
have,
too.
yeah, do have to post this. But anyway, thank you for coming on the channel in such short notice.
It's been a pleasure. It's getting also dark here. Almost
Yeah.
night. So
Okay. All right.
I go.
Take care.
Cheers, Mario.
Yes.